DukascopyTV recently spoke to Gavin Friend, a London-based market strategist from National Australia Bank, about the euro-dollar and the increasing chance of a Greek exit out of the euro. He joins me again now to discuss several more currency pairs. Gavin, the last time we spoke we were discussing the political uncertainty surrounding a new Greek government. Now, as we know, this also recently brought the euro down to a 3.5-year low against the British pound. Looking forward, what's in store for this pair over the coming months, by year's end and, of course, into next year?
Well, we have had for the last 2 or 3 months a view that sterling would do quite well against the euro. This was a non-consensus forecast, and it's not really based on the idea that things are fantastically brilliant in the UK. Far from it. It's all about the relative difference. We know that in the past, during past euro crisis, that sterling has tended to do quite well, despite the kind of challenges and headwinds that the UK economy faces. So we've got some evidence to suggest that, you know, when the euro is pressured, sterling tends to do quite well. So you see these kind of, in brackets, safe haven, or inverted commas, safe haven flows into sterling. You know, investors understand that the UK economy is still a large, flexible economy. It has its own monetary policy and central banks in charge of its own currency. That's the good bit for the UK. I'm not trying to gloss over the fact that there are huge uncertainties and challenges for the UK economy, and at some point, as and when the Eurozone gets its act together, you know, post, say, a Greek fallout, sterling will come under pressure again. But that's a story for, you know, I don't know, 3 to 6 months, maybe 6 months down the road. It's not a story for now. I think for the moment, you know, we're looking quite happy with the forecast we've got, where sterling broke down below a recent low at 82.25 versus the euro, and I think we're moving into a sort of a 79.5 to 82.5 type range, possibly on a spike low to sort of 78.5, that kind of 3 or 4 big figure range. And then, you know, as I say, maybe 6 months' time, euro sterling will move back up again into its old range of sort of 82.5 pence to 88 pence, and depending on what's happening in the UK at the time, you know, whether we're still lagging behind, whether the coalition government has survived and managed to push through the austerity, we'll get a clearer picture on how far up in that range it will go.
I'd like to wrap up by talking about the Australian dollar. In relation to the Australian economy and its currency, what do you see as being the short, mid and long-term trend for, say, the Aussie dollar, US dollar cross?
We have had a bearish view on the Aussie for some time now. The last 2 or 3 months we've been calling down. When we were at 108.5, we had a forecast of 103, 104, which has been met. The reasons behind that move are well known in terms of you know, the domestic struggle that's going on in the economy versus the booming mining sector, the attendant decline in the terms of trade, which, you know, did rise to historical highs. That's now started to deteriorate. On the other side of it, of course, you know, we now have an RBA which has changed its view, courtesy of, you know, this ever-growing split between the domestic side of the economy and the external side of the economy. We know from the RBA minutes and statements that the central bank is growing increasingly concerned about the high level of the Aussie, despite the fact that, you know, the terms of trade seems to have peaked already. So it seems to be growing more and more of a concern to the RBA. Now, the fact that CPI numbers have come in lower at the last quarterly report, but it's clear now that the RBA is in a loop where we have this mix of increasingly tight fiscal policy, which can be offset by easier monetary policy down the road. And I think, you know, the combination of all those factors, together with a declining global appetite, risk appetite, which we said, you know, disproportionately tends to hit high beta currencies such as the Aussie and the Kiwi, suggest that there are further losses in store for the Aussie. You asked me specifically about Aussie dollar. Well, we've got a forecast for June of 103, which is under review because we've already met that target, and it is likely we might ease that down slightly. But I just want to caution on that, because, you know, some of the currencies that I think that can do better than the dollar even would be the yen.
Gavin, thank you again. It was a pleasure speaking to you. Now, we'll have more Targets in Focus later on today on DukascopyTV, but for the meantime, goodbye.